This is the fourth push-up, 1, 2, 3, and we're accelerating up. This is starting to look like a blow-off top. Here's the daily chart, 1, 2, 3. No sign of a top. We'll probably go at least a little higher. We'll probably start to convert into a trading range soon, but I just don't see a top. Because this is climactic, it increases the chances of a sell-off. We have higher lows and higher highs when we're trying to get a bull breakout above a bull channel, and that usually does not work. So it increases the chances that we're going to get at least 2 to 3 hours of sideways to down trading today. It might start on the open. It might rally for an hour and then begin. However, this is accelerating up in an overbought market, and that is a possible parabolic buy climax. And if you get an overbought market and you get an extreme strength and you start to get a pullback, the pullback often lasts a lot longer than what you might otherwise think. On the daily chart, I've been saying all along that I think we have 100.5% pullback. I still think we will. But if it comes from a very climactic rally, it might be more than 100 points, and it might, which means more than 5%. To sell below 1, the bears obviously want a bear bar closing on its low, and they would like to have at least a decent size bear body. To buy up here, I would not buy up here. Yesterday we channeled up. To me, this is a wedge top. We're getting a bull breakout above the wedge. And when that happens, you're always going to be thinking about a possible measured move up, and we're very close to that right now. That would be the target. From this gap, that is also the measured move target. So we have 2 measured move targets within 3 points of where we are. Bulls buying because they doubt the first reversal will go straight down. However, I'm concerned that this is becoming too climactic. Everyone who has not bought is finally buying, and everyone who's been shorting is finally covering, except the strong traders. The strong bulls will use a buy climax to take profits, so the strongest bulls will sell out of their longs and not look to buy again for a lot of bars. And the strong bears will sell into a very strong buy climax, and they will not get stopped out. The weak bears do get stopped out, but the strong bears never get stopped out. They're confident enough, and they have a big enough account that they can continue to sell as it goes up. But this is, I think, a risky open. The other chart, I'm going to get rid of. I can change this channel. Oh. Weekly chart, it looks like this channel is more important. Boy, it's a tough. I'm not buying. I'm going to wait. It's just too extreme. Normally, this would be a good buy, but I mean, it is a good buy, but I'm not going to take it. This is just so extreme. When it's extreme, there's an increased chance of an abrupt reversal. Yesterday I talked about the sell-off at the odds were we'd come back to the 41 close, which we did. But the probability is less when the market is this extremely climactic. Therefore, bulls buying here. It's dangerous to buy more lower if it immediately reverses. So I'm not opposed to buying here, but you got to make quick decisions. For example, if 2 is a bear bar closing on its low, I think you got to get out below 2. Still buy the close, but I think this is pretty. You got to be pretty careful about buying up here. We're at 2 measured move targets. Both at the same price. And this is an extreme buy climax and a breakout above a bull channel. 75% chance the breakout is not going to get very far before it starts to pull back into a 10-bar two-legged correction. Any bear bar closing on or near its low is a reasonable sell setup. This is strong enough so that the bears might get one more push up. We have a target above, and we get to within 2 ticks of it. I talked about that yesterday, that if you get to within 2 ticks of a target and not 1 tick, the market usually has to go a little bit higher. Therefore, the odds are we're going to go a little bit higher, but this is a very dangerous market to be trading. It's a very dangerous market to be buying. 1 and 2 strong enough. A lot of bears will wait to see if we get 2 or 3 bear bars and then sell, or wait to see if we get one more push up and then a second failed breakout above yesterday's high. But this is a really dangerous market for the bulls. You're at 2 measured move targets, and you're getting a bull breakout above a bull channel. Theoretically, buyers at the 2 low. I'm not buying. If I were not talking, I probably would have bought the 1 close and scalped out for 1 point. I'm going to open my examples folder. Whenever there's a gap up, there's an increased risk of a trend day. Whenever there's a big gap up, if there's going to be a trend day, it's more likely up than down. However, this is a special circumstance. It's too climactic. So if there's going to be a trend day right now, I think slightly more likely it'll be down than up, despite the big gap up and the 2 strong bull bars. Here, big gap up, first attempt, first failure, second failure. I'm hoping we get a second failure because that would be a higher probability sell. Here, a bear ILI, which is also a second failure. This is what we might get, but our sell signal bar today did not close on its low, so it's not a very reliable sell. Here, this is not a clear reversal at all. Here's the first strong bear bar. And even with these reversals, they led to a swing down and not much of a bear trend. And I think that'll be the case today if we do sell off, that we will not get much of a bear trend. Reversal right down on the open, big gap up, micro double top, bear trend. Strong sell-off on the open. This was last week. Couple bull bars, swing down. I think if we do get a sell-off, it's not going to become a bear trend day. We'll probably get some kind of a reversal. So down for 2 or 3 hours and then back up for 2 or 3 hours like this. Or possibly this, just sideways all day. But you see, there's something wrong here, right? Yesterday we had 2 bull bars and then a bear doji, and it never triggered a sell. It just kept going up. Today we have 2 bull bars, gap up, but a big bear bar. It traded below the low of the prior bar, and now bar 4 is trading below bar 3. So traders sense that there's something wrong here with the big gap up. Right now, I think more likely than not, we'll close the gap before the day is over. My big problem with the bears right now, we did not get to within 1 tick of the target. Usually the market has to get to within 1 tick or higher. In other words, it has to get to 1 tick or to the target or above the target. And therefore, I still think we're going higher. Not a good looking buy signal bar, bar 4, but we have that magnet above. And I think that makes it likely that we have not seen the high of the day. Best case for the bears, 1 more new high and then a second reversal and have the second reversal come with a pretty good sell signal bar. So something like this. Not a good looking high one, but still always in the long. We've now reached both targets. So this is a sell zone. In a strong bull trend, the bears need a good sell signal bar, which they do not yet have. And for the bulls, always in long, but I think there's increased risk. Second entry failed breakout yesterday's high. Second entry failed breakout yesterday's high. Micro double top. It took a while to get a reversal down here. Here's the second entry. Never went above the high of the sell signal bar. Today, here we had a low first entry, and here's the second entry. It took an hour of a triangle before the sell-off. Looks like I have 2 copies of this. I'm talking about the bear case and not the bull case, even though we're clearly always in long. Because this is, I think, we're getting a bull breakout above a bull channel, and only 25% chance you get a strong bull trend when you get a bull breakout above a bull channel. Minute chart. Another way to draw a bull channel. The bulls want this to be a measuring gap. Right now, they're beyond a measured move based upon this measuring gap. And they're hoping that this is the measuring gap, that we go up another 40 or 50 points from here. I think the odds are against it. What happens if we get a 1-tick bear body? You sell below it. It'll be a second failed breakout yesterday's high, but you'd have to question why the bears can only get a 1-tick bear body if they're on the verge of taking control. A lot of traders will not sell below 6 unless it has a pretty good bear body, 2, 3, 4-tick bear body closing on its low. Every bar is filled by the close, but it requires quick decisions because of the increased risk of a top. I don't want too many lines on the chart, so I'm going to get rid of this one. Strong enough consecutive bull bars 5, 6, so that a lot of traders will not sell below 7, unless 7 is a very strong bear bar. Parabolic wedge, 60-minute chart. Around a measured move up from that 9-day tight trading range. might get a parabolic wedge top here. Because these two bars are so strong, we may get a third push up. So a nested parabolic wedge top, 5-minute and 60-minute. Probably buyers below 6, buyers below 7. If 7 closes on its low or has a 1-tick tail, most bulls will not buy it. Too much risk of a second failed breakout yesterday's high. I think the market's deciding whether it's going to have a second failed breakout above yesterday's high, and this will be the high of the day, or we'll get one more leg up and a parabolic wedge top. I think that is more likely because 5-6 are so strong. A little bit of room to the 60-minute measured move target. That's the 60-minute target based upon that 9-day type trading range. So that's consistent with buyers below and one more push up to a parabolic wedge top. This is a sell signal, second failed breakout above yesterday's high. But just like selling below 2 and below 3 were low probability bets because the signal bars were bad, selling below 7 with a 3-tick tail is also bad. However, there probably will be parabolic wedge bears selling somewhere above 7. I would not buy above 7. We're almost to the 60-minute measured move. It's 3 ticks above the high, 27, 26.75. And theoretically it's a bull flag, but not a good looking buy setup, plus significant resistance just above. For the bears, not a very good looking sell, even though it's a second failed breakout of yesterday's high. I still think it's slightly more likely that we're going to go a little bit higher. Probably sellers not far above. So I would not take this buy. Buying 8 low, maybe, but buying 8 high, I would not. I bought it for a scalp and I'm out. We're in the sell zone. I'm not opposed to selling with a limit order here, but I think it's better to sell with a stop or to wait until we get maybe 3 or 4 consecutive bear bars and then start to sell. If we get the reversal, which I think we will. Do you think the computers are aware of this measured move? Of course they are. You can see how we're hesitating exactly at that price. Limit order bears sold either at the 6 high or a tick or two below the measured move target and put a stop maybe 3 or 4 ticks above the target, hoping that they're catching the high of the day. In general, whenever you take a low risk trade like that, you lose money because low risk always means low probability. However, I do think we're trying to get a parabolic wedge top, and I think we're going to put in an early high of the day. I said on the open that we might rally for an hour or so and then get a swing down. If 10 closes on its low, or even as a 1 tick tail below, I would get out of swing longs. Okay, it's a parabolic wedge, but not a particularly strong sell signal bar. I would get out of longs below 10 simply because of the parabolic wedge at the measured move target. However, it's not a strong sell, and a lot of bulls will not get out below 10. They'll keep a stop below 4. If we start to get 3 consecutive bear bars, then they'll get out. They will not let their stop get hit. Whenever you have a stop that's far below, you're usually going to get out before your stop is hit. Looks like we're going higher. We may have to get above the high of the first hour. First hour closes bar 12, another 8 minutes or so. And we might have to get above it, a little bit above it. But I think we're going a little higher. As you move up from here, as you move up from the middle of the gap is there. Okay, swing short, but not very good probability for the bears yet. A bad sell signal bar. High one buy, always in long. I think we're going to get a parabolic wedge top. So anyone buying up here, I would not do it unless you're really experienced, because you're going to have to make, I think you're probably going to have to make some quick decisions. Still a parabolic wedge top. 5-6 strong enough, so we may get a third push up. 1, 2, 3. The bear's looking for a good sell signal bar. Remember I said we may go a little bit above the high of the first hour, which we just did. Even if we get a good sell signal bar, the odds are against the market going straight down. Usually the market goes sideways after a parabolic wedge, or sideways to down for 10 or more bars. It's only rarely that it goes straight down. And therefore, it's not like if you don't sell here, you miss your chance. If this is the high of the day, and if we're going to get a reversal, there'll be plenty of time to sell. Right now, the market's still always in long. But a decent bear bar, 13, bulls will get out below. Aggressive bears will sell. Other bears will wait to see if we start to get several bear bars and then sell. As for buying up here, well, it's a spike in channel, but we're getting a lot of overlap, and I think it's climactic. And the context is good for a climax. 60-minute chart, a parabolic wedge rally, measured move based upon a 9-day trading range. Parabolic buy climax, still going higher. I am flat. I'm looking to sell. I was long, but I'm out now. Buy the close, very tight channel, but too much risk of a reversal. Also, unlike yesterday where we knew the market was going to come back to the we knew the market was going to come back to the 41 close. I think that's less likely today if this becomes a parabolic reversal. Too much risk, it does not come back there. Here, the buy the close bulls were able to get out. Here, if they bought that close, they get out here. If they bought this close, they were never able to get out. You know, I have mixed feelings not being long here, but I'm not willing to buy this high up in what is a probable parabolic buy climax. Now, what do the buy the close bulls do? 14, all right? They're saying, uh-oh, musical chairs, the music stopped, right? Not a great looking sell below 15, pretty far down in a strong bull trend. But we're probably going to start to go sideways to down for the next hour or more. For the bulls, they get out below a strong bear bar, like below 15, I think. Can you keep buying? Can you buy the 14 low, the 16 high? I would not. I think this is going to be a parabolic wedge top and an early high of the day. And that will start to go sideways to down for an hour or so, and then decide whether we're going to keep going up or reverse down. If we start to get 4, 5, 6 sideways bars, and then we've probably begun that pullback. Looks like we probably have already. The bulls are hoping that it's brief and we continue up. But if you get a 10-bar pullback after a parabolic wedge and then you resume up, usually the resumption up fails and it pulls back down. Resumption up did not last very long. This is what the bulls wanted. They wanted to go relentlessly higher like yesterday. I think that is not likely. But we might do this. We may go sideways for 3 hours. Here, tight trading range for several hours. This is probably the most likely thing, sideways to down for an hour or more, and then 40% chance bear breakout and a reversal day down. You can see the buy the close bulls, 12, 13, 14, are panicking. They're giving up. And that increases the chances of a couple legs sideways to down. And it increases the chances that we've seen the high of the day. Yesterday, 16, 17, around now, the third bar was a bull bar. And that weakened the bear case. I said that at the time. I said the bears really needed a third consecutive bear bar to have a higher probability of a high of the day. And that's true here as well. If they get a third bear bar, then I would say better than 50-50 chance we've seen the high of the day. And traders will start selling closes and selling above bars, looking for a swing down. Unlikely to go straight down. Right, this kind of a sell-off is unusual. Bar 17 trying to be like bar 18 yesterday. The bulls are trying to get a bull body, and the bears want to keep it as a bear body. Even a one-tick bear body is good, but it would be better for the bears if the bar closes on its low. If it closes on its low, it increases the chances that we've begun a swing down. If it only has a one-tick bear body, it increases the chances that we're going to go more sideways. You can see bar 18 opened at the 17 close, not below, and 17 has a fairly big tail on the bottom. So that increases the chances that we may go sideways more. But I would stop buying for at least a couple legs sideways to down. And bears are short, or they're selling, or they'll sell above bars. They'll sell bear closes. That tail on 17 increases the chances that we'll get a pullback from this new bear trend. All of these buy the close bulls are worried now. Bear doji 16, 17 make it more likely we're going to go sideways than straight down. But if 18 closes on its low, that would start to increase the chances that we'll do this. Here we had two decent bear bars. Today, so far, we only have one. What do the bulls need to buy on a stop above 18? I don't know. I think most bulls will wait for two legs sideways to down before buying. I think we're probably going to do this sideways to down for an hour or so. I think most bulls would prefer at least a second entry buy, even though we're still always in long. And the bears, they're concerned that we've had three doji bars here. And therefore, this is unlikely. More likely, we're going to enter a tight trading range and a limit order market. The bulls who buy the 14 close, who did buy the 14 close, are hoping for it to get back to that 14 close so they can get out without a loss or with only a small loss. Right now, I would say 60% chance we've seen the high of the day. That does not mean bear trend. It simply means that we're probably not going above the high. And we could simply go sideways here for hours in a tight range. If that were to happen, then instead of 60% chance, it becomes 50% chance or 40% chance that we've seen the high. Probably limit order market, sellers above bars, especially around the 14 close. You have limit order bulls above the 14 low, 1 point lower. They should be able to avoid a loss, so we probably will get above the 14 low. The buy the close bulls 14, I don't know if they're going to be able to avoid a loss. I'm not sure. It has to go one tick above that 14 close. And right now I think it's more likely than not that those bulls will lose money, that we will not get above the 14 close. Will the bears who sold the 18 high scalp or swing trade? It's 5 ticks down and we're pausing, so some of them are scalping, but it's a possible high of the day. And this is what the bears are hoping will happen, that we totally reverse the rally and get down to the open. That would create a reversal day on the daily chart. More likely, we'll start to enter a tight trading range. This would be a second entry buy, first entry above 18, but 21, even if it's a bull body, it would be 6 bars without a bull body, and not a very good stop entry buy. And for the bears, they'll sell above, especially around the 14 low, because 16, 17, 18 had a chance to have at least one big bear bar closing on its low, and the bears were unable to create one, I think it's more likely we're going to go sideways. A bull IOI, a decent bull bar, but probably more of a limit order market. We have a spike pullback channel, so support down here, 9 low, 20 gap bar buy around the moving average. But we also have a magnet, the 14 low, limit order bulls up there. A lot of times when you have a spike pullback channel, the market goes sideways about halfway down, deciding whether it's going to get down to the 7 low or it's going to bounce and try to get back up to the high. I think we're probably always in short, but I also think that we're probably in a tight trading range. And the market's looking for the bottom. Bears getting a breakout. The bulls want the breakout to fail. They want a double bottom, 7 low. The close of this bar is important, and the close of the next bar. If it has a big tail on the bottom, then the bulls will hope that this is what happens, that instead of going down, we just go sideways, and then maybe we can go up. On the other hand, if it closes on its low, it's probably a give-up bar and the start of a swing down. I sold during this bar, taking a chance that it's the start of a swing down. But if it closes up near the middle, I may get out and wait. Bull trend, big bear bar, bulls giving up, and the market never got back above its high. It went sideways, but ultimately had a second leg down. This is like today, strong bull trend, give up bar. A lot of times the bulls try to get a reversal, but if the bar is big enough and closes on its low, usually you eventually get a second leg down. Outside down, give up bar, follow through, probable swing down. Got some follow through selling and ended up as a trading range day, but a give up bar, bulls are giving up. Bulls giving up, got a swing down. Bulls giving up, very strong give up. Give up, sideways, still got a second leg down. Give up, sideways, small second leg down. Give up, sideways to down the rest of the day. $20 gap bar bulls, are they going to be eager to buy this? I would not. It would be better for the bears had 22 close on its low. But I still think it's probably going to be a give up bar. The bulls are hoping it's a second leg trap, first leg a bull flag, second leg a bear breakout, but a sell vacuum test of support, the moving average, and a 50% pullback. Low probability buy above 23. Okay swing. For the bulls, they're hoping it's a second leg trap and that we're going to go back up to the high. I think it's more likely that it's a give up bar and that we're going to get a second leg down even if we bounce here first. Probably sideways here for an hour or so and then at least a small second leg down. This happens all the time. You look at the bar and you say, is it a measurement gap or an exhaustion gap? And I think it's going to lead to a second leg down. It's a big enough bar and the context is good enough. So I think we're always in short. But as I said, we may go sideways and even test the 22 high before we go lower. Bar 24, the final bar of the second hour. 60-minute chart, parabolic wedge, trying to get a decent sell signal bar. The bigger the tail, the more likely we'll go sideways. If it closes on its low, the more likely we'll start to go sideways to down. Looks like bar 24 is going to close around its low and be a better sell signal bar, increasing the chances that at least for the next 2 or 3 hours, we'll probably go sideways to down because the 60-minute chart has a parabolic wedge at a measured move target based upon the 9-day range and a decent sell signal bar. 60-minute sell signal bar closing on its low probably have to go below the low of that 60-minute bar, which is the 24 low, to trigger the sell to see if there are more buyers or sellers there. But I think we're always in short, even if we bounce here. 22, big enough second day leg down, likely. 24 might be that second leg down. It could be the end of the sell-off, but I think the best the bulls will probably get over the next hour is the trading range, and then we'll probably get a bigger second leg down. So the best the bulls probably get would be something like that. The bears might not get any more than this, but I think it's a big enough bar, context good enough, so even if we go sideways for an hour or so, we'll probably get at least a second leg down. Do I think we'll get this? I would not be surprised, but I think the odds are against it. I think it's more likely that we're going to go sideways, or, like this. Bulls trying to do this. Strong reversal down, microdouble bottom, and they hope to get a rally back up to the high. I compared 14 with 41 yesterday, but I think the context is different. Yesterday we did get all the way back up to the 41 close. Today I do not think we'll get there. I think we'll stall around the 22 high, maybe a little bit below. What about a stop entry buy above 25? If you take it, I think you're scalping. It's probably better to be looking to sell a double top around the 22 high. This kind of a thing. It might be more of a limit order market for the next hour. Always in bears, if 25 closes like this, I think it's reasonable to get out above its high and wait. I think we're entering a trading range. If you think about it, we have a double top 18.21, but a bad looking sell signal bar 21. It's reasonable for bulls to buy the 21 low, and therefore some of those bulls will buy more lower, and they expect it to get back to that 21 low. And I think we will get back there because it was reasonable for bulls to buy that 21 low. Not a good looking sell signal bar 21, but the bears made money. Not a good looking sell signal bar 23 or 25. 25 I would not take the sell. Obviously I'm wrong, but I would not sell on the stop there. It's always in short. I get back to flat. But I am looking to sell again higher. If we start to go sideways, I might buy for a scalp. Something with a small wedge, sell climax, bad follow through, sell climax, bad follow through, sell climax, tail. So for me, I want to get out of shorts and look to sell higher. Aggressive bulls, They probably can make money, but it's not a great buy. A pretty tight bear channel, so the bulls are scalping with limit orders for 1 point. Big up, big down, big confusion, big enough reversal so that the reversal up is probably minor, which means the best the bulls get is a trading range. So for the next hour or two, I think the best the bulls can get is a trading range, very tight bear channel. So minor reversal. For the bulls, they're hoping it's simply a pullback in a broad bull channel. And despite the tight bear channel, they're hoping we go up to a new high. We have a parabolic wedge top nested within a 60-minute parabolic wedge top and a strong enough channel down so that it's more likely reversal up here will be minor and result in a lower high. So at this point, I think 70% chance we've seen the high of the day, and maybe 60% chance we've seen the low of the day. Reversal days, if the rally goes up a lot of points like this, 10 points, and you get a reversal day, usually the market has a hard time going much below the low of the day. Sometimes you'll get a huge reversal day where you have a 10-point rally and a 20 or 30-point sell-off. That's unusual. More likely, if you do get to the new low, it won't get much below the new low. Reversal day did not get to a new low. Did not get to a new low. It sold off for the rest of the day, but never got down to a new low. Here it got to a new low, but not much below the prior low, even though it's a huge reversal. Big rally, big sell-off, sold off, for 4 hours and got to a new low. Did not get far below the new low. Late reversal. It did go far down. Here it got to a new low, but could not stay at the new low. If the initial rally is not very big and you get a reversal, you have a better chance of the market going far below the low. Today we rallied 10 points, more than 10 points on the open. If we get to a new low, I think that reduces the chances that we're going to go a lot below the low. Context really pretty good for the bears, so I would not be surprised if we did get a huge bear day today. I think the odds are against it. For example, look at the daily chart. Right now we have a bull body, but what happens if we sell off and close the day around yesterday's close? We might. And that would create a huge sell signal bar on the daily chart. More likely, we're going to start to go sideways here. Doji 15, 16, 17 usually does not lead to a big bear trend. Bad follow through 23, 25 usually does not lead to a big bear trend. So I think we're probably going to bounce here or soon. But still always in short, and we might stay always in short for the rest of the day. Bulls trying to get a bull body for maybe an II, and wedge, high or low. Not a very good looking stop entry buy in a tight bear channel. It would be better for stop entry bulls to have the market go sideways for several bars. This is a limit order buy, buying the 24 low, the 25 low. It might turn out to be the same price that the stop order bulls will get, but minor reversal. And the best the bulls can hope to get probably is a test of the 22 high. The bears wanted to be a relentless sell-off. They wanted to just keep going down, 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 never letting the bulls out. probably going to enter a trading range and probably will bounce soon. Limit order bulls starting to make money, buying the 22 low and 1 point lower, 24 low, 25 low. Increases the chances that we're going to start to enter a trading range here. A lot of times when you get a pullback around 50% or a reversal around 50%, the market starts to go sideways. We triggered a sell on the 60-minute chart. And remember I said that because the channel is tight, there might be buyers below. I said we probably had to trigger the sell, probably had to go below the low of the bar, but that we might start to go sideways here. The bulls are trying to create a pullback on the 60-minute chart. So instead of the current hour being a good entry bar for the bears, the bulls are hoping it's simply a pullback in a bull trend. So they're trying to have this hour rally and for this bar to be a pretty good bull bar. They're trying to avoid it from being a big bear bar. They don't want a parabolic wedge with a good sell signal bar and then a very big entry bar. So they're hoping that it's a pullback and that we go higher. But parabolic wedge, good sell signal bar, probably not a good buy signal bar with this hour, even if it does close a little bit higher. 60-minute chart looks like tight trading range, maybe sideways to down. 5-minute chart looks like a bear leg in a trading range, and maybe we'll test this gap around the 24 high, but always in short. You still have limit order bulls who bought the 21 low. They bought more above 28. I do not think we'll get up to the 14 close, but I think we will get to the 21 low. It was reasonable for those bulls to buy there. They buy more above a bull bar, 28, and then they look to get out around that 21 low, break even on their first buy, and a profit on their lower buy. The bulls want this sell-off to be like this sell-off and get all the way up to the high close. I think the circumstances are different. Here the trend was already, it was pretty strong but not particularly climactic, and this is the first set of gap bars. Today we have nested parabolic wedges, and we have gap bars here, but I think the rally will result in a lower high. So I think the target is the 21 low, the 22 high, and not the 14 high and the high of the day, not the 14 close and the high of the day. We might get there, but I think we probably have entered a trading range and that we will not get all the way up to the high. Are we back to always in long? Maybe bar 31. If 32 closes here, we are. But a lot of times when the market's in a trading range, it becomes always in long right before it reverses down. And it becomes always in short right before it reverses up. That's the target, the 21 low. Bears will wait for a second entry short. Pretty good reversal up here. Strong enough reversal up, probably the bears will need at least a micro double top. The bulls are hoping that this is the start of trend resumption up to the high, but I think it's more likely a trading range day. Like this, parabolic wedge, and then sideways the rest of the day. Would I buy up here? I think you're only buying here if you can put a stop down here and scale in lower, because I think this is probably not going to go much further. The bears want a double top 22, break below the neckline, and then new low of the day. Not likely to happen for at least several bars. This is a strong enough reversal up so that the bears will probably need at least a micro double top. The bears want a lower high major trend reversal, but when the lower high has a lot of bull bars in a tight channel, the reversal is usually minor, not major. And that means the best the bears usually get is a trading range. And they'll need a double top a couple hours from now before they can get a credible major reversal attempt. For the bears, a double top, 22, neckline 26. Strong enough reversal up, 31, 32, probably buyers below. But since I think we're not going to get above the high of the day, probably sellers not far above the 33 high. I think we're always in long in a bull leg and what will end up as a trading range day. Bulls trying to create a high one buy signal bar on the 60-minute chart. It's the entry bar for the parabolic wedge bears, but it's a terrible entry bar. Instead of being a big bear bar, right now it's a bull bar and a high one buy. The bulls are still hoping that this gap will be a measuring gap instead of an exhaustion gap. Probably buyers below 33, but they'll probably scalp. Because it's a trading range, we can test all the way down here before the buyers come back. It is a lower high major trend reversal, but with 4 decent bull bars and 6 bars without a bear body, it's more likely a minor reversal, which means the sell-off is probably part of a trading range, which means it'll bounce rather than just go straight down. For the bears, they want the double top, lower high, break below the neckline, and measured move down. Remember the 60-minute bar. This is bar 36, the end of the third hour. The third hour is the entry bar for the sell below the second hour. And right now, it still has a bull body. The second hour ended with bar 24. The third hour, the current hour, opened with bar 25. And the bears would like bar 36 to have a bear body, so they want bar 36 to close below the open, which is bar 25, but I think that is probably not going to happen. More likely confusion and sideways. 2 strong bull bars around a 50% pullback to the moving average. Bull's looking for a second leg up after a break above the bear channel. So we'll probably test up to around the 32 close. It's possible we can get a swing up to the high of the day, but I think more likely we're going to be sideways. Limit order bulls bought 33 low, 1 point lower, and they're probably scalping. Most bulls probably will scalp. Some see this as a bull flag, a breakout, and a pullback. So a reversal and bull flag from the pullback, so a small cup and handle pattern. I still think trading range day more likely. I think we're always in long, but I still think we'll stay sideways for at least another hour or two. I'm scalping. Because we're always in long, I'm looking to buy. I did not buy the 33 low. I bought a point below, and I'm out now. Bulls want to break down above the double top and a measured move up. Bears want sellers at 32 high in a trading range. Enough bull bars here so that I did not sell the 32 high, although I think the bears who do probably will make money. More likely a bull leg in a trading range and a resumption of the bull trend. So bears will start selling above bars, above 32, above 41. Bulls are hoping This is a major lower high 32, and they get a strong breakout and a measurement up based upon this double top. But more likely the trading range will continue. For the bears, you can call it a triangle, 1, 2, 3, and a lower high major trend reversal. Remember I said that 34 was a minor reversal because this rally was strong and the bears would probably need a double top to have a credible reversal. This is a better attempt at this is a major trend reversal. This is a minor reversal, means bull flag or trading range. And now that you have a double top, this is a major trend reversal, but too many bull bars. And that makes it a low probability short. Most decent major trend reversal setups have a 40% chance of a swing down. This is less than 40% because we're getting too many bull bars here and then again here. That's 60-minute parabolic wedge top. Even though we have a bad entry bar, a lot of times we have a parabolic wedge top and enters a tight trading range lasting 10 or more bars and it gets sloped slightly down. And that's what the market might be doing here on the 60-minute chart. So a 60-minute chart might be doing this. If it lasts 15 or 20 bars, that could be 2 or 3 days of pulling back. It's still on the lower high major trend reversal, 41. The context is very good for the bears. We have a parabolic wedge on the 60-minute chart. 5-minute chart, probably more trading range, maybe for the rest of the day. Are we always in long or short? I think we're probably always in short. As I said earlier, I think we've seen the high of the day. I thought we would test around the 22 high, but not to the 14 high. I did not sell below 41, so right now I'm waiting. Bulls having a credible buy. Bull IOI at the moving average. But I don't think the probability is high enough for a scalp. You're buying at the top of a triangle. Okay, swing. You take a chance that we're going to go to a new high. But I think the odds are against it. The bears see this as a reasonable bull flag, and they're trying to prevent it from getting triggered because they know a lot of the bears will exit. And they know a lot of bulls might buy above 48. So a lot of the bears are selling, trying to prevent it from getting above the 48. They want their double top, lower high, major trend reversal to be successful. I still think this is the top of a trading range and that we're going to test back down. Remember I said earlier, give up bar, probably a trading range, and then test back down. Give up our trading range, test down about 20 bars later, and then again 40 or 50 bars later. Give up bar, trading range, test down. A lot of times when you get the give up bar, it goes sideways before there's a second leg down. Tight trading range, so very close to 50-50. I think slightly more bearish than bullish because I think the buy the close bulls 14 are probably going to get trapped, and 22 is a strong enough give up bar to make it likely that we have to test down. Whenever the market's in a triangle is just a type of tight trading range where you're getting higher lows or lower highs or both. Whenever it's in a triangle like this, it's similar to a trading range. 50% chance the ultimate successful breakout will be up, 50% chance down. 50% chance the first breakout attempt up or down will reverse. Failed bull breakout. Bears trying to get a bear breakout, lower high major trend reversal. If 53 closes on its low, especially if it closes at or below the moving average, then 40% chance the bears will get a swing down. The bears need to trigger the sell by going below 53 low. Higher probability, they wait for one or two big bear bars. 4-bar ledge, 4 highs, exactly the same price. 80% chance we're going above that ledge at some point in the next few days, even if we sell off 10 points first. Failed bull breakout, failed bear breakout, and now trying to get the reversal up. One other thing about a ledge, when the market breaks above it, it usually pulls back below the breakout point. So if we go up for several bars, we'll probably dip back below the red line at some point today. Still no follow through. So still not yet a high probability trade. The bulls have momentum, but the bears have location, top of a trading range. Breakout and follow through, but not big breakout and not strong follow through. Still always in long since 32, but top of a trading range today. Probably not going much higher. Ledge, even with a big sell-off, it came back above the top of the ledge. And when it does go above the top of the ledge, it usually pulls back into the ledge. Ledge, the next day, breakout above, but pulled back below the top of the ledge. What do bulls do if 56 closes on its low? Still probably buyers below, but a small breakout of a tight trading range, not a strong buy, and failed breakout, not a strong sell. A lot of bulls are waiting for a bigger breakout to buy. Big enough breakout 54, probably buyers below, but terrible follow through. So a lot of the bulls will get out below 56. Bears, I would not take the failed breakout sell. You know, we had a bull breakout, a failed bear breakout, and now we have a bull breakout here. And of the 3 breakouts, it's the best looking one. And I think that makes this a low probability short below 56. Ticks up, tells you a lot of the bulls who bought above 57 scalped for 1 point. We get up to the 14 close. That tells me that some of the bulls who bought there bought more above the bull bar, maybe above 28, and they are also trying to get out, break even at the original price and with a profit at their lower buy. Earlier today, I did not think we would get all the way back to the 14 close. Still having a hard time getting above that measured move target on the daily chart. And you can start to call this a wedge. $54, strong enough for a second leg up. Well, it has the second leg up. And it's still a potential lower high major trend reversal. Bears are probably not going to sell below 58. Maybe if it closes on its low with a two-tick body, some bears will sell. But it looks like most of the bulls scalped out. And if the bulls are scalping near the high of the day, that means that they do not believe it's going to go a lot higher. The market keeps trying to create major trend reversals. Below 34, probably minor. Below 41, probably minor. Below 53, potentially major. Below 56, probably second leg up after 54. Below 59, theoretically major, but I'm not taking the sell. Bull body, 58. If we get 3 consecutive bear bars and the bodies start getting bigger, maybe I'll sell the close. Bears trying to get a lower high major trend reversal, sell off into the close. More likely it'll stay a trading range day, but it might get all the way back down to this area. Still always in long. Bears probably need one more bear bar to make it short. Bar 60, the close of the hour. The hour opened with bar 49, so we're closing around the open, and so it's a doji bar. You can see on the 60-minute chart, it's a doji bar. It's a slightly lower high major trend reversal. Bad follow through, still making higher lows, 54, but I think difficult to do anything right here. Extreme buy climax, and then a tight trading range. The bears always try to get a major trend reversal, and it can be a very big reversal. The bulls keep hoping for a bull flag, so they hope that any reversal down forms some kind of a double bottom, and that the bull trend resumes. 15-minute chart, 3 pushes up, 1, 2, 3. Maybe 40% chance that if we trigger the reversal, we'll get a swing down. 60-minute chart, tight trading range after the parabolic wedge. Probably will pull back into this tight trading range at some point over the next couple of weeks. Potential final flag. Swing short, but not high probability. Not great signal bar 58, 59. Not very big bear breakout 60, and not very good follow through 61. For 4 hours now, 3 hours, we've been getting slightly higher highs, slightly higher lows. The bears need to change that. They need to start getting lower highs and lower lows. This might be one of those days when we get a breakout up or down in the final 30 minutes. The bears want the day to close near the open so that it'll be a reversal day. The bulls want it to close near the high so that it will be the third consecutive bull day. Tight trading range, lousy for stop entries. The market's deciding, is it going to be a reversal day? Are we going to close down near the open? Or is it going to remain a bull trend day closing near the high? We're getting a lot of bear bars. Since, look at this, there's a lot of black on the screen. That's selling pressure. Another sell signal for the bears. They've had many, all have been losers. A lot of bears, if instead of taking stop entry shorts, will wait for a bear breakout and then sell. The bears need a big bear bar closing on its low, or 3 or 4 small bear bars closing with at least a couple of them closing near their lows. The bears have had lots of bear bars, 22, 24, 26, 35, 60. Every one of them has had bad follow through. That's why if they get one more bear bar, traders will look at this breakout different from all the others. Over the past several hours, the bulls have had good breakouts as well. 31, 32, 39, 54, 50, 62. All of them have had bad follow through. It's still not yet high probability that this is a move down to the open, but it's on a swing short. One more decent bear bar would make it always in short. Because of that, you get bulls buying the 68 close, betting it would be like all the other trend bars and lead to a reversal instead of a trend. But we're getting late in the day. We're into that window when trends often begin. The bears trend resumption down, bear trend rally, and they're trying to get a resumption down. Stop for the swing bears above 67. And for the bulls, will they buy above 69, a high to buy, in their trading range 61, 69? They will if it's a pretty good bull bar. But the problem that they have is if they're buying what's their goal. I think it's not a good enough setup for a swing, and that means they're buying for a scalp, and I don't think the probability is high enough for a scalp buy. If I were trading always in, I would be short, stop above 67. A breakout pullback sell, but a bull body 70, still on the swing short, and still not yet high probability. Very tight range for several hours here. Difficult to do anything except with limit orders. The bears need to get a sell-off starting in the next few minutes, otherwise we're just going to stay here. And the bulls are hoping to get a new high, but I think the climax was so extreme on the 60-minute chart that we're probably going to go sideways to down, for a lot of bars. When you get a parabolic wedge top, the market usually corrects for 10 bars, 15, 20 bars, sideways to down. This is sideways, so that is more bullish. If it were an endless pullback down, then it would be more bearish. The bears would have a 40% chance of a reversal. But with it going sideways like this, the bears have less than a 40% chance of a reversal. For the bears, they hope this is a two-legged pullback from the 68, 69 breakout, but the math is just really bad here. The market is going sideways. It keeps breaking out up and down, but not going anywhere. And I remember 25, 30 years ago, I would be buying every bull breakout, selling every bear breakout, and at the end of the day, wondering how I lost so much money. It's because it's a tight trading range. The probability is the breakouts are all going to fail. My 80% rule, 80% of the breakout attempts will fail. So what do? Well, this late in the day, it's hard to do anything because it's a limit order market. Earlier in the day, you can look to sell high, buy low, and scalp. But this late in the day, I think it's dangerous to be trading with limit orders. Certainly dangerous in the middle of the tight range. And for stop orders, the bears got a scalp below 67, but that was it. They could still be swinging short. The measured move target, that green line, has been good resistance all day. And that green line is this line here. A 60-minute chart, we had a tight trading range for 9 days, and we got a breakout, and we're stalling exactly at the measured move projection. We're getting into that buy the close, sell the close window. A lot of times 12:35, the market begins a buy the close or sell the close trend. The bears still want to get down to the open, and they might. And the bulls don't have to do anything. Their goal is simply to get the bar to close somewhere near its high, which is where it is now. And it does not give them any additional power if we get a higher high, if it closes above where we are. So all the bulls have to do is stop the bears from getting the reversal down. If the bulls keep it in a tight trading range, they win. Another stop entry sell, but bottom of a tight trading range. So I think very difficult to make money taking that sell. The alternative is to wait for 2 or 3 bear bars from here, 1 or 2 more bear bars, and then sell closes, and then you have a higher probability of making a scalp. Bears are selling every bull close near the top of the range, and bulls are buying every bear close near the bottom, and both sides are scalping. Low probability sell, higher probability to wait to see if we actually start trending. Bears trying for sell the close. In general, here it's starting at, you can argue maybe it started at 12:35. The breakout was 12:45. That's getting a little bit late for a sell the close breakout to be successful. Still sell the close. Bulls want a bull flag, wedge bull flag 61, 69. And bears want it to continue to work down to the open. $76, I think, is a difficult bar for sell the close bears. The bears are not getting big bear bars closing on their lows, and you can see we're bouncing. And that means that a lot of the traders who sold below 74 are buying back their shorts with a 1-point scalp. So they are not confident. There are a lot of traders not confident that we're going to go down very far. Important bar 77. If it closes near its high, bears will get out above 77. If it closes near its low, that would continue to sell the close, and it would increase the chances that we'll get down to the open. Is it still sell the close? Well, look at the bodies. 75, 6, 7. The bodies are getting smaller. As we're going lower, there's less enthusiasm to sell. That's not what you want if you're a bear. For the bulls, you got 5 bars without a bull body. So a wedge bull flag or a wedge bear leg in a trading range, but not a very good stop entry buy. So better to do nothing. I did nothing on this sell-off. I wanted to sell closes, but I wanted 76 to close near its low. So I let it go. If the bears cannot get down to the open, at a minimum, they'd like the day to close below the midpoint. If it closes below the midpoint, here's the daily chart. I consider that a reversal day, not a good sell signal bar. Even though it's a reversal bar, it'd be better to have a big bear bar closing on its low, especially after a big bull bar like this. Not a lot of traders are going to sell below today's low. If we gap down tomorrow, we have an island top, but the channel is so tight, it's a low probability short. Weekly chart, 1 day left, and so far a very big bull week monthly chart, the month's only a few days old and it already has a pretty good bull bar. It still could become a big bear bar by the end of the month, but right now it's a pretty good bull bar. We knew a few things coming into the day. 60-minute chart, we knew there's a measured move target above, and that was resistance all day. We knew the trend was very strong, and we probably would get one more leg up, which we did, 1, 2, 3, and that would probably be a parabolic wedge, which means traders would sell, bulls would sell to take profits, especially at resistance, and aggressive bears would sell for a scalp. With the channel this tight, unlikely to go straight down, so the bears all day long were scalping. Yesterday we had a wedge top, 1, 2, 3. And today we gapped above and had a pair of bull bars. Bull breakout above the wedge, and we went up for more than a measured move. I said on the open that I thought today would not be like yesterday. I said I thought we would start to transition into a trading range, and we spent most of the day in a range, 15 bars up, and then the rest of the day sideways. And we have a wedge attempt here, we have a parabolic wedge here, and we have a 60-minute parabolic wedge as well. So it's a nested parabolic wedge, 5-minute parabolic wedge inside of a 60-minute parabolic wedge, and at, I think, significant resistance, a measured move up based on the height of this 9-day tight trading range. And we're also at the top of that channel. All of that made me think we were not going to go much above this parabolic wedge top today. When we were down here, I said we probably had seen the high of the day, but I also said it looked like a bear leg in a trading range, and therefore we probably would rally maybe to the 22 high, less likely to the 14 close, which is exactly where we went. 22, I said we probably would get a second leg down. I was suspicious. 26, I didn't think was a big enough second leg down. I thought we were going to get a second leg down somewhere in here, but here we're getting it at the end of the day. On the open, by the close, all the way up. First stop entry trade, failed breakout yesterday's high, below 2, below 3, neither a good sell signal bar, so we're probably going higher. And then second entry sell below 8, but a doji bar, following 2 big bull bars, probably going higher. And then below 15, a nested parabolic wedge at important resistance, the measured move up, the green line on the daily chart. Possible high of the day, okay short, but more likely we're going to go mostly sideways. Excuse me about my voice, I still have laryngitis. A very tight bull channel usually does not become a bear trend without first going sideways. We had a surprise breakout 22, but I closed at the moving average and with a big tail on the bottom. So breakout test 3 high. The bears are hoping for a measuring gap and the start of a bear trend. The bulls are hoping for a failed breakout, second leg trap, and a bull channel. First leg is a bull flag here, and the second leg, they want a failed breakout. And bad follow through, then another bear bar 24, 26, bad follow through 25 and 28. So it looks like a bear leg and a trading range day, which means we'll go up and test resistance like that measured move target. The 22 high, maybe the high of the day, maybe the 14 high close. And we had a pretty good rally up 32, 31, 32, always in long. And therefore, even though 34 is a reversal, a lower high reversal, it's probably a minor reversal, which means the bears will need some kind of a double top with 32. They had it here with 41, but a pretty good pair of bull bars, 38, 39. So again, a low probability sell. And then we entered a very tight range with higher lows, lower highs, a triangle. We got a bull breakout, a bear breakout, a bull breakout. 54, strong enough bull breakout for second leg up. We got it, and it reversed, but not a good sell signal below 58 or 59, so probably more sideways. Better sell signal, 67, and we're still going down from there. 72 never went above the 67 high. and then another sell signal below 74, and the market's still in that sell, but I suspect we're not going much lower. Stop entry sells today. First reasonable one below 15, and below 21 is not all that good. Below 23, 25, I thought those were bad. I would not sell that. I would not sell that. The next reasonable one, 53, close at instead of below the moving average. This is not good. The next reasonable sell was 67 and then 74. Stop entry buys, buying above 4, not great. But, if you're trading always in, and let's say you get out of longs below 3, you got to get long again above the bull bar. So either above 2 or 3 or above 5 or above 7. Stop entry buys above 8 and II doji bar, but it looks like a parabolic wedge. And then above any of these bars, 10, 11, 12, 13, I said that I stopped buying up in here because I thought there was too much risk that it was the third leg up and a parabolic wedge and that we could get a reversal day. So I did not want to be buying that high. And then buying above 18 after 3 bear bars, probably sellers above. Buying above 28 is a special situation. It's a moving average gap bar, but it's a special situation because it's similar to bar 41 yesterday. I'll buy the closed bar 14, and the scale in bears never had a chance to avoid a loss. So we may go up high enough to avoid a loss if you scale in above 28. Stop entry buy above 36 or 37 or 38 for a 50% pullback to the moving average. And then stop entry, anything, sell or buy here is bad. And really no good stop entry buy for the remainder of the day. Buy the close, sell the close. 1, 2, buy the close, and then 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. But when the bar started getting small and the third leg up, I would stop buying closes at 11 or 12. Sell the close. 3 bear bars, 17, but 2 were dojis. That reduced the chances of a bear trend day. So by the time we hit 18, we're probably going a little bit lower, but I think a trading range is more likely than a bear trend because we're not getting consecutive decent sized bear bars closing on their lows here. We're getting doji bars, trading range bars. Sell the close 22, high probability, big bar, surprise bar. Probably get at least a small second leg down. Buy the close 31, 32, but the target is the 22 high, and a lot of times the market becomes always in long near the top of a trading range, and that's where you should be looking to sell. And sometimes it becomes always in short at the bottom of the trading range, which is where you need to be looking to buy. So you got to be careful buying strong rallies near the top or selling strong sell-offs near the bottom. That was pretty much it for buy or sell the close, unless you were doing the opposite, trading range type trading, selling bull closes near the top and buying bear closes near the bottom and scalping. Limit orders, the 2 low, high probability buy, 8 low, high probability buy, 18 high, high probability sell. 22, we know we're going to get a second leg down. You could buy below 23 or 25 if you used a wide stop, and then 33 probably buyers below. 37 maybe sellers above, but you need a wide stop. And then here, better, I think, not to trade. Here, not great trading. They sold above 40. I said the bears probably would make money selling above there. Bulls made money buying below 54, and they did not yet make money buying below 69. It had to fall 5 ticks to scale in, which it did not, and it's too late in the day to be doing that. So right now the bulls see a bull flag, the bears see a parabolic wedge top, and it's a parabolic wedge top on the 60-minute moving average as well. It's very climactic, so I think that if we go higher, today will be the final bull flag and we'll get a pullback. And if we do not go higher, we could get a deep pullback down here, so easily 10 or 20 points over the next 2 or 3 days. Okay, questions. Would you review the day from an always in perspective? Always in long on 1, I would get out below 15 and sell either below 15 or above 18 or below 19, and I would get out above 28. Since we're going up to the 22 high and a minimum, it's okay to buy above 28 or wait for 31 or 32 to buy. And okay to get out below 34. But you got to buy it again. It's still always in long, so you got to buy again above 38, and then through here it's still always in long. But I would get out. I would just step aside, get out below 53, maybe get out below 58, and then the next reasonable signals were either below 67 or a second signal below 75, and then get out above 80. Question, was it reasonable to sell the close of bar 32, okay, for a scalp, anticipating that by the close bulls from 14 who bought more above 28 would exit break even? Yeah, it's reasonable to do that, but you probably needed to stop above the high of the day. And I thought that it was likely 31, 32 that we'd get a second leg up. But, what he's doing is he knew they were buy the low bulls, 21, who bought the 21 low, and they waited for a bull bar 28 to buy more, and they would get out back around the 21 low. You also had buy the close bulls 21, but I would not do that. And we got up to that 21 close, got it right exactly to it. And he was arguing that the buy the close bulls would be relieved to avoid a loss, and they'll sell out. Break even if they bought the 21 close or the 21 low, which they did. A trending range was likely. It was a minor reversal, even though it was always in long. So I think that was okay. Any update on when you'll post live swing trades? Well, I think I'm done with all of the recording as of a couple days ago. All that's left is edits, and also if Richard concludes that some of the audio is not very good, he'll have me record certain or unacceptable movies over again. That will allow me to start focusing on swing trades, or trying to do swing trades in here, because that'll be a big distraction removed from me. And my problem has been the one that I've always had, and that's that I take a lot of scalps during the day, and it's hard for me to be scalping sometimes against the always in direction and swing trading in the always in direction and trying to manage both. And so that just it creates, it's just very difficult for me to do. But hopefully now that I'm near the end of what I have to do for the course, I can try to figure out some way to do it and not forego profits. I don't want to miss a bunch of scalps that I would otherwise take, and just take swings on the trading account. The trading account, I want to have the account have like $10,000 so that it's comparable to what a one-lot trader would do, maybe big enough to take a second contract if I had to. For example, if I bought the 21 low, put a stop down here and buy more here, and then, get out there, break even on the first, and with a small profit on the second. But, that's my next focus. So hopefully, before long, I'll start trying to do that, and I'll start recording video with it and start recording audio with it as well. All right, the bulls have a double bottom bull flag. Whenever you have a buy climax at top, and then in trading range, there's always a double bottom bull flag, and there's always a major trend reversal. And the odds are close to 50-50 bulls and bears, but I always look to the bars to the left. We're in a bull trend, so I always assume that the probability slightly favors the bulls, because on a higher time frame chart, this would look much more like a bull flag. Here's a 60-minute chart. That's a 240-minute chart. It does not look like a top. It looks like a bull flag. 60-minute chart looks like a bull flag. 5-minute chart is pretty neutral. But even if we got a bear breakout on the 5-minute chart and a swing down, it could still be simply a bull flag on the 60-minute chart. So 50-50 on the 5-minute chart, but still slightly higher probability that we're going up because it's still a bull flag on the higher time frame charts. Hopefully my voice will get better soon. Okay, hope everybody has a good night.